What's up, everybody? So, coming back with an update on USDJPY, and this has played out pretty interesting. So, last week on this higher time frame, I'm going to go to the boom, talking about price's potential right here to dip back down into this region here. And I find it interesting, we didn't quite make it. And whenever price is going in a certain direction, right? Whenever you have right here, like bullish price action, there's always going to be points where the demand outweighs the supply. In other words, there's going to be points where people are buying, people are wanting to buy, they're wanting to get on board with the trend. But if everyone's buying, the market becomes oversaturated. And if everyone's buying, that's a great opportunity for institutions to sell off shares and make their profit back. So I was saying last week that if we tap back into here, that would be this like perfect textbook price action that might lead us to essentially this. But we didn't quite make it to that level. And now we have this push up into these higher price levels. And this right here is a demand trap. Same thing. So we have this lower high right here, right? Nice little retail trading indicator. So we had this lower high, this little zone where we had, actually I'm going to use this to make it a little more clear. So what I'm talking about, okay, so we had that little zone, that price closed lower. This held out as the top, right here, just below 151, just below the negative 0.27 fib retracement. So that can be very telling when price closes just below a certain significant level, because it means at this point, especially when you have like a super candle like this, there's a lot of people that are in FOMO, right? They're trying to get in the move, they're trying to catch the pips that are happening. And so what happens is you have something like this where the volume is trapped. All the buyers get trapped in this, and then price, look, it's not going to return to that level. It's not going to let them out from buying right here. Their stop losses are probably down where these wicks are, especially something like this huge wick. The second thing this accomplished right here is, as you can see, we had from this point this nice, right, just downward angle. And when retail traders see that on the chart, they're thinking this is the trend. A trend is forming. So we're going to start selling into that. And as soon as you start selling into it, right, you get a huge wick like this, again, taking seller volume and then rising up out of it, buying the short orders. Okay, so what I think we're going to see now is this to continue and actually finally take the 0.27 and complete this trade that we have right here. The singular one, whether you took it as a singular trade or whether you've been taking your profit at significant levels. Because like I said when I first brought up this thesis, there's a lot of opportunities to catch pips in here. This was something like a 485 pip range starting from the bottom. So there are a lot of opportunities to gain like a quick, say, 90 pips, 110 pips. So from here, I do think now that this wick has happened, we're going to see some price action breaking up above this level. See, there are all these people that were buying right here, and they might have been correct that price is actually going to go higher, but not yet. It's because the market needs to breathe. It needs to take liquidity on the other side before the potential of it going up to these higher highs. All right. Now, counter perspective, because as I always say, we're not here to predict the market. We're just here to find the highest probability outcome that we can and work with that. If we're failing to break up in these levels right here, I think I'm going to take This whole thing right here, if we're failing to break this, essentially, we're gonna not see this hit 27. But given that it's been playing with the Fibonacci so well, I do think it's likely that we end up breaking this zone. So with that, we have some options. For now, I think this bottom, because I also liked the way that right here, we came right back into this zone with this wick. It was just like right back onto the top of it. So I mean, that's your classic retail support and resistance. We retested a certain specific area, but it was clean because there were a lot of people in here that were like thinking they needed to get on the short trade. Maybe they had all these orders and they were thinking it was going to come back down into here, which I'm not going to say that's not possible, but given how this wick played out, it's a lot more likely that we come back into here. If we come into here and we don't break this, we probably will come back into here. But if we come and we break above this level, actually validating the rest of the long move, like I said, we're going to hit negative 27, and then we'll see from there. That's as far as I mapped out this trade. Given it could go further than this. We still have the 0.618 way up there. What is this? It's so high up there I can't even see what price level it is. 154. So, and I believe 154. I'm gonna have to go to an even higher time frame. I believe that's price discovery. Yeah, so that's like levels that this pair has not yet been to. So I think it's possible we get up there, but we're gonna have to wait and see. And for now, like I said, it's just about mapping out the areas that we think it's highly likely that we could take some pips out of this move and get that. If you want to hold it and say, okay, it's going to complete the Fibonacci sequence, that's totally your call. But if you want to say, okay, I'm going to take profit here, here, and then if I get another retest and something that looks strong, some price action that's indicating to me that we're going to go higher, there are going to be opportunities for a re-entry. So you take what you can, you take what the market gives you, and you be grateful for it. All right, with that, I wish you all happy trading. Hope you learned something from this video, and enjoy the rest of your week. Peace out.